How's it going, everybody? My name is Kurt Friedrich, and welcome to episode 37 of TNT Stocks. Today's actual date is December 8th of 2025. The simulated date is January 3rd of 2028. I do apologize for getting this video out late. It is Monday, December 8th, and I did have Army Reserve this past weekend. I wasn't traveling, was in the area, but still, with my Army Reserve obligation, it has delayed me posting this video. So I do apologize that, but the Army Reserve duties do take priority during the weekend. Uh, Moving on, so you see it's the simulated date is January 3rd of 2028. So we'll be closing out the 2027 year and beginning the 2028 year. In this past week, I'll just go ahead and say it was not a fun, or since the past episode, it was not a fun time since the past episode. We did have some downward trends, but I will say overall our portfolio did hold up pretty strong, even though across the board with this simulation, my other simulations, and even my own portfolio did have take some hits. Well, not some hits, but did take a dive over the past since the past episode. So with that being said, we'll go ahead and get into our criteria, disclaimer, line items, and graphs, and unpack everything that has happened since the last episode. All right, so criteria. We do one video per week. We'll simulate 1 month. I'll create videos when available at home, not while traveling on Army Reserve duty or vacations. Any week with a missed video will not be considered a simulated month. Each video will simulate loading $100 per month to the TNT Stocks account. All stocks bought in the simulation are actual companies with their actual end-of-week closing stock prices. Stocks can be sold between episodes at certain prices per personal strategies. This month, we bought 3 stocks at a price range of $5 to $100, spending capped at $90. Let us see what $100 per month will look like over time. Disclaimer, these videos are for entertainment purposes only. I am not qualified or certified to give professional investment advice. Day trading has high risks involved. Any gain or loss is at a personal risk. Past performances do not guarantee success in future stock purchases. It is highly recommended that you do your own due diligence when it comes to deciding which stock you will purchase. All right, let's go ahead and start getting into our line items. And if you haven't seen some of our previous episodes, I mentioned pretty much in every episode now that we split our line items up into 2 categories, or 2 different slides, just because there's so many different line items that we have that if we put it all on one slide, which we do at the very end, but we take out the legend. But I feel like if we did that, then it'd be, I'm afraid that on your monitors or whatever screen you're using, it may be condensed and blurry and just a whole lot to information overload and a whole lot to unpack all in one. So I do split it up in 2 different slides, but basically what we're looking at here is the line items that are in color. Starting at the top, we'll start with AGL. So this is still continuing to be an eyesore. Our oldest line item is our top money loser. I don't like seeing it, but again, if you haven't watched any of the previous episodes, the platform I use for buying and selling stocks on my personal portfolio charges a 10% commission for anything purchased under $10. I don't know about or not $10, but $2 per share. I don't know about selling, but just staying true to that though. We are going to wait until this AGL comes back above $2 before we do let it go, and also recoup some of the funds that we are at a loss with it. I will say that it has been trending upward. A few episodes ago, it was all the way down to 50 cents. I believe since last episode, it got up to 70 cents. I can't remember off the top of my head if it was 70 cents or not, but it was, basically it took a deep dive on Friday. So I do know that it was substantially higher than 65 cents. Again, I think it was 70, but can't say for certain. Either way, though, it is kind of on an upward trend. So we'll see how it does in the coming episodes, and maybe we'll get to a point where we can recoup some of the funds on it, still take a loss on it, but still, and then cut sling load on it and let it go. And all right, so moving on, you'll see Tigo here. We did sell one share $50 at $50.49. Had an income of $3.25. I just will point out, you probably see Tigo up here. Why we didn't sell that one? Basically, if you look, what we purchased this one at $37 versus this line item at $47, a $10 difference. I would like to give Tigo an opportunity to, or this line item, an opportunity to continue to grow. If it doesn't continue to grow, if it does kind of trend downward, I still wanted to recapture some of the gains from this line item. Maybe we don't gain $12 on this line item. Maybe it keeps coming down, but I will say we will gain something from this line item. Again, it may only be $5, it may be $10. I can't say what happens in the coming episodes, but that's why we kept this line item here. Moving on, you see GH still continues to be our top money maker. If we sold this on Friday at closing, we would have brought home $90. Well, not take home, but our gain would be $90. I will say that it was with everything kind of trending downwards, it was close to letting go. There was one day where, I mean, it was like within a few cents of hitting my strategy to go ahead and let it go. There's a number that all these get assigned that where if it drops below that amount, I go ahead and cut sling load on it. And this one was close, but it didn't get cut. So let's hope that it does come back this week or between now and the next episode and continues to grow even higher. And when we do eventually sell it, we do get more than $90 on it. But if this between now and the next episode, if it drops further down, we got to let it go. Then we're going to let it go and take home whatever gains we can out of it. You see further down, TK. Yeah, we bought this one here a little under a month ago. It did let it go. I think we did have some other line items with TK or not. I do know it was on my other simulations that are run for myself and also my own personal portfolio, and I believe on all those simulations in my personal portfolio, it's gone from those as well. So this is probably it for TK, at least in this episode. Who knows? Maybe it'll resurge and come back again, and we'll give it another shot. But anyhow, we sold 4 shares at $9.44 and took a hit of $2.44 on it. Moving on, you'll see here are the line items that we purchased. Some new companies that I wouldn't say new companies because some of these we have had in previous episodes. I know CVI has been in a previous episode. I don't know about BNR or G&K, but still good to have some newer companies in, or at least some fresh ones coming in, because previously in previous episodes we've been having some repeats of the same companies. So you'll see, actually just looking here, I'm seeing TK right here as well. So we do still have some more TK. There is some left out over there, but and you see this one is taking a pretty big hit too, but it's only down 8%. We're gonna give that one. The reason why we didn't sell that one is it didn't hit that as I mentioned, it doesn't hit that assigned dollar amount that each line item gets to sell. So yeah, maybe right there it will resurge. But that's also kind of proving a point. We do have some companies here that in our portfolio that are repeating. I did want to open up my strategy to possibly or to allow more companies, different companies in, but just the way it's happened over the past few episodes, we've been able to pull some different companies into our portfolio. So kind of going down a different little rabbit hole, but get back on track a little bit more. We did buy 4 shares of Burning Rock Biotech at $20. 4 shares of Genco Shipping and Trading Limited at $19.32, 2 shares of CVR Incorporated at $33.54. If we sold everything on Friday, our overall number of shares on our portfolio would be 160, and our gain would be $241. All right, so with that being said, we'll move over to our over-under, which would pretty much shows our gains of our portfolio if we did sell at any given time. You see this one did take a dive. We were at 290, now we came down to 240, so it took about a $50 dive since the last episode. So yeah, that's why I said it's been at the very top that it was a downward trend over the past since the last episode. But as you saw, we didn't sell very much. We didn't let very much go, which again contributes to the strength of our portfolio. So let's hope this graph pops back up between now and the next episode. Maybe not set that record of a $290, but you never know. Maybe it will. Maybe it won't. But let's hope that it at least moves back in the upward direction. I do want to point out that if you look, yeah, for 2027, did pretty well. You see, before then, 2025 and 2026, we were just hovering above and below that $0 amount, and pretty much since looking at my notes, since January, yeah, December of 2026, we're negative $27. We came on the positive here. I haven't looked back since. This one right here was $35 and just keeps moving in the upward direction. Yeah, we have some episodes where it went down. Looks like only three episodes where it went down. So moving down 3 out of 12 months, that's pretty good. So we'll keep our strategy, and hopefully this will keep moving in the upward direction. Our income, here's one that's nice to see also. You see the first, at the beginning, again, it was teetering below and above $0, mostly below, had a pretty big spike, and then just really took a dive coming down. But since, let's see, looking at my notes here, since October, it has moved onto the positive side and hasn't looked back since. And you see we have now what I will call a streak. 3 months in a row where we've had an increase. Doesn't look like a lot right there, but it was basically $35 and $36. But it is an increase, and we'll call it what it is, and we'll take the streak at how it is. Let's hope that this streak does continue in the right direction, and this income amount does go up. Like to see a record. The record on my notes is showing 105. And at this point, hey, if we sold that GH, that would break a record and definitely jump up a great amount. Take home here. So we did have, since that one line item we did sell with a positive amount, did basically a take home. If we sell any company with a positive dollar amount, we take home half of it. So with this one here, we did have an increase of $192 to $194. And closing out December, our overall take home amount is $194.25. Closing in on that $200 mark. Hopefully between now and the next episode, we can hit that $200 mark. That would be really cool to see. I would say that I would like to have seen over a 3-year period of time more take home than this. But it also just may be that how it is with the one real time versus a simulated time. Maybe playing a factor in how much we're taking home. So if you're playing this for real, hopefully, since watching these episodes for the year of actual calendar year 2025, your take home is more than that if you were putting $100 per month in your portfolio. But still, cool to see. Cool to see a trend of this one continuing to have some growth on it over the last. Looking on the notes, 1, 2, 3. Yeah, it's got a 3-month trend also in the upward direction. And let's hope between now and the next episode we break that $200 barrier. Moving on, overall, what we have invested, we've gone up from $2,800 down to $2,900. Basically, this is all shares that we have in our portfolio at the purchasing price. This one we'll always see kind of moving in an upward direction. However, we don't want it to move, or we want to buy low, so we don't want it to be a steep upward direction, but it will always be moving, or typically always be moving in upward direction. You see some months where it's moved down, but typically it'll be moving in upward direction. Here's our overall total. This is basically what we have in our portfolio altogether. We went up from $3,400 to $3,500. This one should always be moving in an upward direction. If it's ever moving in an upward direction, that means we took a dive. Since we're adding $100, we took a dive more than $100 in our overall portfolio, and yeah, that wouldn't be good to see. So I would like to see it kind of, you see it's pretty much just kind of a straight line. I would like to see it kind of curving up, which means that our gains between episodes is more than $100, but I just don't think we have enough to make that kind of growth. So in the coming years, maybe we'll start to see that begin to happen. But either way, our portfolio right now, we went from $3,400 to $3,500. And then here's our combined slide of just kind of showing the over under income and take home all together. And again, cool to see, you see since January of last year, everything has really begun to move in the right direction. And again, I changed my strategy up back in July, and I think that really does kind of illustrate how that strategy has been moving, has been working and moving everything in the right direction. And again, our second combined slide of invested in total. These, as you see, generally run parallel to each other. There should be some separation. That's what we expect to see as our gain, our over-under increases. That's what I believe drives this separation, which we want to see. What we purchased at versus what we've grown to in this slide helps illustrate that. All right, so that was a lot to unpack in this episode. My timer shows I've been going on for 17 minutes now, which I think is probably the longest episode we've had. I didn't think that it was going to be that much to talk about, but yeah, we're given a lot to talk about in these episodes. So I hope you do get some useful information out of this. You see here in this this slide, this is our portfolio all together after removing the line items that we did sell. You see we now have a total of 155 shares in our portfolio. If we sold Monday morning here in a few minutes when the market opens, if we sold everything, we would have an overall gain of $240, which I don't think is bad. If you look, $3,500 divided by 240, that's just a little under 10%, which is not bad. I would like to see that 10%, but per our old strategy, just, that kind of has hurt it a little bit. But if you look overall, again, the top line items of my old strategy and negative 88, negative 77%. But if you start looking down, 33, 35, 80, 40, 20, 10%. Some here, again, since last episode, taking a dive, I expected to see some of these be a little bit lower, some of our newer purchases, but some of our older purchases still hanging pretty strong, pretty tough. Our portfolio is looking really good, So cool to see. If you bought some of these items or some of these companies since seeing it here on these videos, I hope your shares have gained percentage-wise as much as some of these. And I hope you're getting some useful information out of these videos, and I hope they are helping you with your day trading options that you're using. So that being said, good stock hunting. Don't forget to comment, rate, share, and subscribe. And until the next video, take it easy.